This is Horizon's Middle East and Africa, our top stories this morning. Asian equities slip following a sluggish day on Wall Street as investors prepare for a rush of earnings, headlined, of course, by Nvidia, that will set the tone for risk assets. Also, HSBC shakeup. The bank's incoming CEO is said to be considering cutting layers of middle management when he takes charge next month. And Mpox vaccines are on their way to the Democratic Republic of Congo as Africa's health agency prepares a quick rollout of jabs. It is just past 8 a.m. across the Emirates, 6 a.m. here in South Africa where I am. I'm Jennifer Sabasaja in Johannesburg, in for Jumana Bersachi this morning. Let's take a look at where markets are, because as we mentioned, it is not just any other trading day. It is, of course, Nvidia Day, as some analysts are calling it. The most important stock on planet Earth right now, potentially because that is the chip maker's influence on broader markets. We could potentially see that impacting across the board. But let's just take a look at where futures are right now. As we mentioned, of course, Tuesday, was a relatively low trading volume day, and you can see that reflected a bit with S&P futures and also NASDAQ futures. What we saw on Tuesday, the S&P volume was 13% below its 10-day average. Potentially, investors are waiting on the sidelines to see what happens with Nvidia. Right now, if we take a look at the 10-year yield, 382.73, again, relatively unchanged. And of course, we are paying a close attention to oil right now. If we see Brent crude trading just above $79 there, and that is coming after sliding in the previous session to end a three-day rally. We're paying close attention to what is happening in the Middle East and how that is affecting oil. But let's get back to the main event, Nvidia, as I mentioned. I want you to take a look at this chart, because despite the company being one of the largest single stock contributors to the S&P 500 returns in at least a quarter century, according to our estimates, this valuation still puts Nvidia at a relatively cheap price. This chart showing that it's about 5 years below average right there. And so we'll see whether or not these results today potentially have an impact on that price and on markets more broadly. The expectation is that, yes, that will be the case, but we'll have to see what happens. Meanwhile, let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're seeing Asia markets as well in that wait and watch mode ahead of that Nvidia earnings. If it misses or if it beats, either way, we're going to see those huge swings on the stock and ramifications for this part of the world as well. We're seeing the Thai X a bit higher, TSMC, a key partner for Nvidia, catching a bit of a bid. But of course, yesterday we saw it slumping. Ahead of all this, we're seeing trading volumes about 8% lower than our typical this time in the session. So it gives you a sense of how traders are positioning, are cautious ahead of Nvidia earnings. The Hang Seng down about 1%, getting that drag from the Chinese e-commerce names as well after continued concerns amid the economic woes in the Asian largest economy. Jen.
Yeah, thanks so much, Avril Hong in Singapore. We'll check back in with you in a bit. Let's get back to the top story, though. Nvidia is set to deliver its latest earnings report, with analysts predicting that the world's most valuable chip maker will project revenue growth of more than 70% for the current quarter. Joining us now is Bloomberg's tech reporter, Annabelle Drewlers, joining us from Sydney. So, Annabelle, what exactly are we expecting here? Because there are a lot of lofty expectations going into this report.
Yeah, as you were saying, I mean, Nvidia has pretty much become a macro event at this point in time, but the expectations are pretty lofty, and we are actually predicting that they could even perhaps exceed what Wall Street analysts are already seeing. So prediction is for a 70% gain in revenue on the year. Again, some on Wall Street are saying we could even go beyond that, because you've seen that run up in the stock price during the course of August. So a gain of around 10% just tells us there's still a lot of optimism around this. What else we're expecting is really to get a sense of the growth outlook as well. That's going to be a key one to watch, given that Nvidia, where it goes, really guides a lot of AI spending by other major tech companies as well.
Yeah, and Annabelle, I mean, what's the expectation here that we'll potentially hear something outside of, in particular, their AI valuations and their outlook for AI, but maybe as far as the Blackwell chip lineup? I mean, what will we hear from Jensen Huang? Are you paying attention to that?
that's really going to be one of the key things to watch out for. So the Blackwell chip that lineup is really seen as the next generation of AI chips that's going to be coming to the market. And we had actually reported earlier this month that the Blackwell lineup could be facing some sort of production delays. So the big question that's going to be really keyed in for, that investors will be watching out for, is what does Jensen Huang say around this? Because if the delay to the Blackwell chip is only a few days or a few weeks, that might not be too much of a cause for concern. Of course, if it gets extended beyond that and goes into a months-long or many months-long delay, then that can cause much more trepidations. That's going to be a really key theme to watch, particularly as Blackwell chip production is expected to ramp up in the second half of this year and start to add into the bottom line, really, in 2025.
And potentially, a lot of this uncertainty is really why we are seeing markets sitting a bit on the sidelines right now. I mean, what's your read into how we're seeing positioning leading into this major event?
Certainly, if you take a look at options, it tells us that traders are bracing for some pretty wild swings in either direction. So options tell us we should see about a 10% gain or contraction after the release of the earnings. So a really big one to watch for trading sentiment. What else we're watching ahead of the numbers is just the amount of trading volumes. You were mentioning what we saw in Wall Street overnight. I think it was the second thinnest trading volumes we've seen for 2024 so far. But that's also trading or flowing across into the Asian session, where our trading volumes are about 40% lower than they would typically be on a 3-week moving average. So again, it just points to that level of nervousness as to where we go from here.
Annabelle Jewelers with that report. Annabelle, thanks so much for your reporting there. And a reminder that Nvidia CEO Jensen Huang speaks exclusively to Bloomberg Television after their second quarter results drop. Bloomberg Technologies' special coverage begins at 6:30 p.m. tonight in New York. And for early risers across the Emirates, that's about 2:30 a.m. tomorrow morning. You might want to wake up. Just putting that out there. Let's stick with this story, though. Investors are watching closely for those Nvidia earnings. Asian equities, as we mentioned, slipped on Wednesday following a sluggish day on Wall Street. The chip maker headlines a slew of expected earnings reports, which will set the tone for risk assets. Let's bring in Mehvish Ayub. She is a senior investment strategist at State Street Global Advisors. So, Mehvish, thank you so much for joining us. So, Annabelle was just outlining a lot of the different headlines and the storylines we could potentially get from this report later today. What are you looking at? What are you thinking leading into these results?
Good morning, Jennifer. So for us, really, the key thing is that, we don't really like the narrowness of the market. Just listening, going into this show, the focus on just Nvidia in terms of defining the direction of global markets overall doesn't seem very healthy to us from a fundamental perspective. And we are seeing some element of that coming through in our sentiment and fundamental indicators from which we do tactical asset allocation. So I totally understand the focus and the importance of it, but really at this stage in the economic cycle, should we be putting all our eggs in one basket? Should we really be focusing on Nvidia this much? It's a little bit of an unhealthy sign to me in terms of global markets.
So then, Mehvish, if not Nvidia, then what potentially is affecting your positioning then moving forward? Is it potentially the PCE data that we'll get later this week? I mean, everyone is waiting for these potential September cuts. So what then is helping you sort of guide your thinking?
So we have a variety of different indicators. We have a global market sentiment indicator. We have noted a sort of downturn in leading economic indicators. We've seen implied volatility come up quite significantly across equity and currency pairs. And that is indicating to us really to reduce our equity overweight. So we've been very consistently overweight equity for about 18 months. And that position is the lowest that it's been now over the last 18 months. We've also neutralized our duration positioning. So when we think about asset allocation across sort of key equity indices, we still very much favor the US and emerging markets. We're underweight Europe and underweight Asia Pacific, and broadly now coming to neutral duration across fixed income portfolios. So yes, still very sort of slightly positive in terms of growth assets, but definitely not as much as what we saw just a couple of months ago. And that has very much been defined. We can feel the change in sentiment in the market with the kind of events that we've had over the last couple of months, I would say.
What do you think would derail that then, Mehvish? Because as we mentioned, there are still a number of rate cuts that are priced into 2024. What would derail, you think, that market sentiment that you're speaking about there?
So I think exactly what you pointed out, which is essentially that rate cutting cycle. So I know that there's a lot of rhetoric in the market about potentially the Fed going 50 basis points in September. I don't think that's likely. I think that's going to send a very bad signal to the markets in that we're starting the easing cycle and we believe it needs to be 50 basis points. So I do think when we think about what Chair Powell said at the Jackson Hole Symposium, it was very much taking the focus away from inflation and more towards labor data and broader economic growth. And I do think that the key thing that I think market participants are really missing out is that monetary policy operates with a significant lag. And the biggest risk out there is really that the Fed are already too late. If they're data dependent and data suddenly turns downwards, then they are going to be too late. And the impact of those rate cuts is only going to be felt sort of 6 to 12 months down the line. So it's, this view that the rate cutting cycle starting in September is correct is assuming that we have a slow landing, assuming that inflation moderates downwards very gently and growth is slowing but still okay.
Mehvish, then, what does that mean? I mean, you were talking a little bit about where you're overweight and underweight globally. I mean, what does that mean then potentially for risk assets? Because there are a lot of emerging markets more globally that are waiting for this rate cutting cycle to begin. I mean, what does that mean for you and your team and investing into risk assets?
So I do think the rate cutting cycle has certainly turned the direction of the dollar. The lower dollar does provide tailwinds for certain asset classes such as emerging markets and commodities. But having said that, the broad outlook being a little bit more negative, I think it's just really important to have adequate diversifiers in your portfolio. So again, coming back to that original point around Nvidia, that intense focus, yes, have growth stocks, have tech, have Mag 7, have Nvidia, but have other diversifying regional and style equity exposures in your portfolio. And then we sort of take that across to the multi-asset spectrum. That's just your equity. What can you do in fixed income? What can you do in alternatives to really diversify your portfolio? And that's something that we've implemented over the last 18 months, regardless of how overweight or underweight we are in equities. We've had that gold allocation, we've had cash, and we've had a diversified equity portfolio. So I think that's really, really crucial at this point as we start the easing cycle. And again, if the Fed is focusing on growth, on labor data and not inflation, there is a risk that that data turns.
Absolutely, and that's squarely what we are paying close attention to. Mehvish Ayub, Senior Investment Strategist at State Street Global Advisors, joining us from our Dubai studio. Mehvish, great to get your insights this morning. Thanks so much. All right, Supermicro shares closed lower in the U.S. after Hindenburg Research disclosed a short position in the AI server maker. The short seller also accused the firm of accounting red flags and alleged sanctions and export control failures. A spokesperson for Supermicro says the company does not comment on what it calls, quote, rumors and speculation. All right, coming up, Bloomberg has learned HSBC's incoming CEO is considering plans that could remove layers of middle management. We have the details next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. A few reads for you this morning. Israeli security forces say they've freed a male hostage held in Gaza since October 7th from an underground tunnel used by Hamas. The 52-year-old Bedouin Arab Israeli from the town of Rahat was found alone by special forces, according to Israeli military and internal intelligence. The IDF says 108 hostages are still being held in Gaza. Israeli negotiators are heading to Doha today to continue ceasefire talks. Libyan oil output has dropped as authorities in the OPEC members East enforce a shutdown. Bloomberg understands production at the El Fiel facility in southwest Libya has stopped, while local operators are indicating they'll gradually halt pumping nationwide. The move to freeze all output and exports by the eastern Libyan authorities came in response to a decision by the government in Tripoli to replace the central bank governor. And finally, Ukrainian President Volodymyr Zelensky will present a plan to force Russia to halt its invasion of his country to President Biden just weeks before the U.S. elections. Zelensky says he'll also brief presidential candidates Kamala Harris and Donald Trump during next month's trip to the UN General Assembly meeting in New York. Without specifying details, Zelensky says the plan comprises both diplomatic and economic steps. Let's turn to the story we're following as well. The incoming HSBC CEO is said to be considering plans to remove layers of middle management at Europe's largest bank. China correspondent Minmin Lo has been following the story and is joining us now. So, Minmin, what exactly do we know about these restructuring plans?
Yeah, so far what we've learned from sources is that HSBC is considering cutting some middle management staff like the country heads in parts of their global network. But of course, this is still very subject to change because these are very early stages of deliberations that we're hearing about. And this is in some ways a continuation of the changes that we've seen under Noel Quinn's time. And of course, this new CEO, he's taking on the position officially in September. This is perhaps an early sign of how he will put his stamp on the company and lead the firm going forward. We have seen already thousands of job cuts under Noel Quinn, and the company is selling off some of their biggest operations in North America and Europe, including their Canadian and French operations, and also putting a pause on hiring in some areas, choosing not to replace people who have left and calling on its bankers to really tighten their belt and to scale down on spending when it comes to travel and entertainment expenses. And the backdrop of this, as you see on the screen, is the expenses and to rein in the costs that is growing for the bank, especially as we enter into this rate cutting cycle in central banks around the world. That's going to cut into profit margins, and with the U.S. economy slowing down as well. So part of this broader effort to really skin the fat and mirroring what some of its other rivals like Stanchart and Citigroup has been doing as well in terms of restructuring and removing some middle management staff here.
Yeah, Minmin, and I was just going to get to that because we are seeing similar moves by other banks. I mean, is this really just in anticipation potentially for these rate cuts? Is it about cutting down costs? Is that, from your understanding and your reporting, what's behind this?
Yeah, it is about cutting costs, and also we are seeing, the company really pivoting to Asia. As I said, they have been offloading some of their operations in North America, and they're really pivoting back to Greater China, to Hong Kong, where, of course, the firm had been founded over 150 years ago. And we are seeing the Chinese economy really not very hot right now, the deal-making space looking quite lackluster. But in fact, we just spoke to the head of investment banking from Citigroup. He thinks that the bagpipe is really building up, and the bull market run, he thinks, will come back in 6 to 12 months' time because there's a lot of innovation going on, but the higher interest rate has been keeping that on hold for the moment. So we see HSBC also revamping its investment banking division, really streamlining that entire sector. And it's also looking to double down on the wealth management segment to be the leading provider for the ultra-rich in this part of the world. And that means they will have to overtake UBS, which is the market leader in this segment as well. So really trying to focus more of the resources in the areas where they think there will be the most shareholder returns.
China correspondent Minmin Lo with that reporting. Minmin, thanks so much for sharing more on that Bloomberg scoop there. All right, in a few other news bulletins we are following this morning, the UAE has been ranked top of the list for finance and consultancy executives taking up the digital nomad lifestyle. The annual ranking by real estate broker Savills sees Dubai and Abu Dhabi as the most appealing cities for senior-level hybrid workers. The survey assesses cities based on their internet speed, quality of life, climate, rents, and air travel options. Also in the U.S., NFL owners have voted to allow private equity firms to buy as much as 10% stakes in their franchises, loosening some of the tightest ownership rules in professional sport. Deals are expected to happen quite quickly, with firms including Arctos Partners, Aris Management, and others already vetted and approved. Stakes could sell for as much as $1 billion. And coming up, Boeing's delivery delays are forcing Africa's top carrier to lease planes. More from my conversation with Ethiopian Airlines CEO next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's stick in the region. Ethiopian Airlines says Boeing's delivery delays, are affecting its strategic growth plans. I spoke with the CEO, Mehvish Bekele, who told me Africa's top carrier has been forced to lease planes due to Boeing's ongoing failures.
Delayed deliveries of the airplanes will impact the strategic growth plan of the airline. We have raised this issue to Boeing multiple times, but unfortunately, we are not receiving the airplanes per agreed schedule. I think it's not a problem between only Boeing and Ethiopian Airlines. It's a general problem with Boeing, and we have to wait until they are in a position to deliver the airplanes as planned. I believe that Boeing will correct these issues in the years to come, and we have no choice now but to wait until they deliver the airplanes. I don't think it will badly affect the relationship between the two companies, but this delayed delivery is not something that we would like to have from Boeing. But in parallel with that, we didn't want to wait for Boeing to deliver the ordered airplanes, and now we are leasing airplanes from the lease market. According to the current agreement, we will be receiving 4 MAX airplanes starting in November of this year.
That was my conversation with the Ethiopian Airlines CEO. Still ahead, investors are gearing up for the Fed to cut rates next month. Our next guest will talk to us soon. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Asian equities slip following a sluggish day on Wall Street as investors prepare for a rush of earnings, of course, headlined by Nvidia, that will set the tone for risk assets. HSBC shakeup. The bank's incoming CEO said to consider cutting layers of middle management when he takes charge next month. And Mpox vaccines are on their way to the Democratic Republic of Congo as Africa's health agency prepares for a quick rollout of jabs. It is just past 8:30 a.m. across the Emirates and 6:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja. Thanks so much for joining us. Let's take a look at where markets are positioning just ahead of the trading day. As we mentioned, of course, it is Nvidia day. Everyone is preparing for these results later today. Goldman's trading desk actually saying that Nvidia is the most important stock on planet Earth. We'll see whether that actually pans out. But of course, the chip maker has an influence on broader markets. And potentially that is why we're seeing a bit of flatness with futures right now, the calm before the storm, as some people are putting it. S&P futures right now unchanged. And that coming after we saw relatively low trading volume on Tuesday. We saw the S&P volume 13% below its 10-day average. Also, NASDAQ futures just marginally marginally down right now. The 10-year at 382.73. And of course, we are paying close attention to Brent crude right now. Again, largely unchanged, but just above $79.61 there. That is coming after sliding in the previous session to end a 3-day rally. We're going to pay attention to how developments in the Middle East potentially affect that moving forward. But let's get back to the main event of the day, Nvidia. And I want to pay a close attention to this chart because despite what we're hearing from the company, despite it being one of the largest single stock contributors to S&P 500 returns in at least a quarter century, it's still relatively cheap, as this chart is showing. And it's actually, in fact, below a 5-year average. So whether or not we get some indication based on the results today, whether that will change and how that broadly affects other chip makers in the space will be something we want to pay very close attention to. Anyway, let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, it is that countdown to Nvidia, and as that continues, you're seeing caution in the markets, though trading volumes are lower than are typical this time in the session. Interesting to see the greenback catching a bit of a bid, the Bloomberg dollar index ticking higher, and the USD is actually gaining ground against all its G10 peers except for the Aussie dollar, because today we also did get some inflation numbers from down under. It showed a bit more hotness in the inflation print than expectations, although the disinflation trend cooling from the prior month still seems to be intact. So keep that in mind, even as we watch out for the event of the week, Nvidia earnings. We got an earnings report from the likes of a Chinese bottled water maker. This is known Fu Spring, and that really cements the concerns about the Chinese economy as its profits slowed and the stock actually slumped to the lowest level since its debut. So earnings in focus, a bit of data as well, all in the lead up to Nvidia. Jen.
That's right. Thanks so much, Avril Hong in Singapore, for us. Let's stick with that theme, though. Asian equities slip along with U.S. futures as investors prepare for a rush of earnings, of course, as we've been mentioning all morning, headlined by Nvidia. But the Fed's intention to cut rates in September is still on many economists' minds as U.S. inflation figures are released later this week. Let's bring in Zeina Rizk, co-head of fixed income at Amwal Capital Partners. She writes, quote, while a September rate cut is fully priced in, the upcoming moves will be very data dependent as we move along. Our base case remains leaning towards a recession in the U.S., albeit a mild one. I am pleased to say we have Zeina Rizk standing by in Dubai for us. So, Zeina, just walk through this statement a little bit more, because potentially we are seeing a little bit of differing sentiment from what you just outlined there in that statement.
Absolutely. So we still see in the market consumer sentiment is still very strong. We've had mixed economic figures. Retail sales is strong. Consumer sentiment is at its higher. And we know that consumer sentiments constitute close to 70% of the GDP. But we think that when we start seeing we're starting to see cracks in the labor market, obviously. But once we start seeing bigger cracks in the labor market, this is when we're going to start seeing more impact on the sentiment and therefore on consumption and retail sales and all of that. And this is where we think we're going to start seeing the economy sliding into a recession.
Where do we see the cracks popping up, Zeina?
We think that the perception of wealth has been significant from the beginning of the year. So we've had, if we take out the effect of the volatility in early August, the stock market has had a tremendous rally from the beginning of the year. So the perception of wealth is still there. The savings that we have seen accumulate from the COVID era, we start seeing that at this point these are starting to fade away. So they will stop supporting the job market, and also the labor demand and supply gap. This is also faded. So going forward, we're going to start seeing demand of job higher than the supply, and this is where we think we're going to start seeing unemployment rising faster.
Well, Zeina, I wonder then, because of course we're looking at September, and the bias, of course, is clearly towards a cut in September. Are you saying then you think the market is a bit too aggressive in its expectations for what we'll see in September from the Fed?
I think that we're going to just see 25 basis points from the Fed. This is if we don't see extreme figures from the market, we don't see extreme figures from NFP or inflation. I think the 25 basis points is going to happen in September, and it's largely discounted. Going forward, what we think is more important is not the September cut as much as it is the pace of reduction and the terminal rate.
I wonder, Zeina, too, because, of course, it is Nvidia Day, and I know you focus mainly on fixed income, but there are many traders, many people in the market that are watching what happens with Nvidia potentially to affect their own portfolios. I mean, how are you thinking about it?
I mean, the focus on Nvidia is understandable, given that Nvidia is the single biggest contributor in the market this year. But yes, it will impact. It's probably going to cause volatility in the equities market if the earnings are very bad, and it might potentially start changing sentiment that yes, we are getting to the end of the cycle and something is going wrong. But our focus remains more on the figures, which are core PCE coming later this week, and the job figure, employment figure coming next week. I think this is our bigger focus, and this is going to be the bigger impact on the market.
How are you then thinking about positioning? I mean, are you then open to positioning into risk assets, or are you waiting for that data print on Friday to make any sort of dramatic moves?
We are leaning into that data print. So we have been positioned from the beginning of the year overweight on high yield and neutral on duration. So we will start looking at reducing this high yield position going into year end. And we will start looking at extending duration, but we haven't done this yet because of where levels are. So we think we might test back higher levels on the long end. And this is where we'll be more comfortable into extending duration.
Is that just in the U.S., or are you looking to other markets potentially for making that same move?
So we're mainly focused in emerging market. We think that we're very constructive on MENA credits. We think that the fundamentals are still very strong. Valuation from the upside, there is limited upside from here, but we think that the fundamentals are strong and supportive of any volatility. We will be extending duration more in the GCC area because the GCC IG just to focus on interest rate versus fundamental risk. And in the high yield space, we're positioned. We have exposure to Egypt and Turkey. And more of the corporates with whom we're comfortable with the fundamental in the region. This is what we will start reducing as we go along, and as we think that volatility will increase, especially when we get closer to elections, and once we start having weaker economic figures.
All right, we'll leave it there. Zeina Rizk, co-head of fixed income at Amwal Capital Partners, joining us there in Dubai. Zeina, great to get your insights this morning. Let's turn to back here in the region. Mpox vaccines are expected to arrive in the Democratic Republic of Congo from Sunday as an outbreak of the potentially deadly disease spreads. Africa's public health agency says plans are underway to ensure a quick rollout of jabs with vulnerable people first in line. Joining us now is Bloomberg's Ndiro Oganga, who is in Kigali for us. So, Ndiro, what more did we hear from the Africa CDC on Tuesday?
Jen, what we've heard so far is that 380,000 doses of the Mpox vaccine will be landing in DRC on the 1st of September. And they're working to secure more doses because of how vulnerable DRC is and its people. And we're likely to see healthcare workers and children being given priority. Also, earlier this week, we saw consolidated effort from the World Health Organization begin. And they launched a preparedness and response plan. And they're seeking about $87 million. And this will be used in the first 6 months to help mitigate human-to-human transmissions. What we know from the CDC also is that so far they've reported 23,000 cases, up from 19,000 cases last week. And Gabon is the latest country to report these cases. So it's beginning to spread across the region. And the reason we find ourselves in this situation is that Mpox has been endemic in 2023, and 2022. But several countries stockpiled the vaccine. Africa did not have any, and now the continent is vulnerable.
Yeah, and there's trying to not repeat what we've seen in the past. I mean, then what is the expectation then with the vaccine rollout, Ndiro? There's still a lot of questions about who exactly can get vaccinated, but what is expected here?
A couple of things we need to factor in. First of all, if you look at a country like DRC, it's a very big country. It has many refugees, and also it has fragile healthcare system, and infrastructure is not very good. So a lot of work will be done to ensure that they can be able to roll it out seamlessly. Also, the skepticism towards the vaccine and community engagement is ongoing to ensure that by the time the vaccines hit the ground, the people are ready to take them. And Bloomberg spoke to Bavarian Nordic, who say that just one shot of the vaccine is enough to give you up to 80% of protection. The African CDC says we're not likely to see a closure of borders, but upped surveillance to mitigate human-to-human transmission across the borders. What is important, Jen, is that the more this unfolds, it's becoming clearer and clearer that Africa needs to build capacity so that it can begin manufacturing vaccines on the continent to cut costs and ensure ready availability when needed.
Indira Oganga joining us there from Kigali. Indira, thanks so much for your reporting. All right, and coming up, the relationship between the U.S. and China is in focus as Jake Sullivan arrives in the country for his first visit as U.S. National Security Advisor. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The U.S. Special Counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. Special Counsel Jack Smith has updated his indictment after the Supreme Court ruled Trump was at least partially immune from prosecution related to his official acts as president. The Republican nominee says the new indictment is ridiculous and should be dismissed immediately. Meanwhile, U.S. President Joe Biden's top national security aide, Jake Sullivan, met with Chinese Foreign Minister Wang in Beijing as the world's two largest economies seek to manage their rivalry through dialogue.
President Biden has been very clear in his conversations with President Xi that he is committed to managing this important relationship responsibly.
Over the past few years, bilateral relations have gone through twists and turns. The key is to keep the overall direction of mutual respect, peaceful coexistence, and a win-win cooperation. Implementing the common understanding between our two presidents as their San Francisco meeting is our important responsibility.
For more on this, let's bring in news desk editor Jill Desis. All right, Jill, so we're hearing a win-win situation for both sides. What's the expectation, though, for this meeting?
Well, Jen, I think what both sides probably want out of this meeting is kind of, no sudden moves, status quo kind of a deal here. I mean, look, at the U.S. right now, we're gearing up for a major U.S. presidential election in November, possibility that, yes, Vice President Kamala Harris could become the president. So, under the Biden administration, which National Security Advisor Jake Sullivan obviously works for, or it could be a return of the Trump administration should Trump prevail in November. So at this point, it kind of seems like Jake Sullivan is in town. First trip by a national security advisor to Beijing since 2016 here to kind of smooth things over and try to future-proof this U.S.-China relationship. We're in a period right now where obviously tensions remain high over several issues, including China's backing of Russia's war in Ukraine and also some of those, tariffs and other punitive measures that the United States has taken against China as they try to curb its developments on advanced manufacturing and semiconductors. But at the same time, this relationship is still doing a bit better than what we saw at least about a year and a half ago or so when they weren't talking at all. Jake Sullivan and Wang have kind of been meeting up every few months or so to make sure that things are continuing to move. So I think at this point, expectations, or at least the hopes for each side, is that they kind of continue that going forward through the end of the year.
And Jill, there's, of course, the issue of Taiwan and what's been happening in the South China Sea. I mean, can you outline what you think really both sides are potentially going to bring to the table as part of the main issues and the points that they want to make?
Yeah, well, Jen, I think, look, at this point, both sides haven't really budged too much on the Taiwan issue here. So obviously, democratically run island, incredibly important in terms of military strategies going on in the South China Sea. Also, in terms of its capacity for semiconductors, given TSMC's involvement, TSMC's presence, rather, and relationship with the United States here. China, though, obviously claims Taiwan as part of its territory. I think at this point, just kind of a status quo type of relationship where you've got sort of this indirect diplomatic relationship that the U.S. holds with Taiwan, probably something that the U.S. wants to uphold there. China, though, obviously doesn't really want to back down off of its assertion that it claims, territorial control over Taiwan. I think the question, though, Jen, is really whether, any of that relationship would change under a Trump administration. He has, kind of suggested that he doesn't have the same level of support there as a Biden administration would, while, both Trump and Kamala Harris, obviously both remain tough on China in other ways. But I think at this point, once again, it's just kind of boils down to this situation where if they can keep these talks going, just these high-level diplomatic talks going over the next few months, then maybe we don't see a massive ratcheting up in tensions overall between the U.S. and China.
And is there any expectation, Jill, that following this meeting, we will see any sort of movement from now until the U.S. election? You were just mentioning the candidates there. I mean, is there any sort of movement, or is this the meeting where they're hopefully going to iron out some of their issues and sort of park it until we see who the next president is?
Yeah, well, I think that there's a couple of things that, are potentially still on the table here. Obviously, maybe there's some additional talk about, additional punitive measures against China. As you just mentioned, Canada, U.S. ally, just announced some new tariffs on EVs, sort of this tension with the EU, another major U.S. ally over tariffs or import restrictions on EVs and other types of manufacturing issues continues to be a thing. We talk about the U.S. election. I mean, Trump has floated the idea of 60% tariffs on all Chinese goods. I mean, that would certainly be a major ratcheting up in tension there. I think that at least, though, in the next couple of months, as we still have some uncertainty over the election, there is one question about whether or not a Jake Sullivan trip to China would open the door for additional high-level talks or meetings between U.S. officials. You've got Biden potentially being able to meet with Xi at APEC later this year. We'll see what happens there.
Yeah, we'll pay close attention to this meeting here as well. News Desk Editor Jill Desis. Jill, thank you so much for your reporting and your analysis there. All right, and coming up, as Europe's biggest discount carrier looks to lure in customers during the winter months, the CEO says lower fares and flash sales could be the answer. More from Ryanair's Michael O'Leary next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Ryanair says lower fares and flash sales will be needed in the coming months to attract more passengers. The CEO of Europe's biggest discount carrier, Michael O'Leary, told us more about their outlook as well as delivery delays from Boeing. Take a listen.
Pricing is still down, fares are getting cheaper, but the decline has leveled off. And I think that's reasonably good news for our shareholders.
What does the winter look like?
Too early to say. We will have about 8% capacity growth this winter. I think pricing, I think it's reasonable to believe pricing will continue to be down, but I think maybe down. I mean, I think down 5% is my best guess at this stage. But, every time I come up with a guess, somebody thinks it's a forecast. The pricing will be whatever the pricing will be. We will fill our flights. We've launched 4 new routes this morning from Stansted this winter, 7 new routes from London in general. So new routes, winter sun.
But you're having to stimulate demand with
we expect
sales.
We'll continue to have to stimulate demand. But I think that's good. I mean, we've come off 2 years where prices went up by 20%.
Yep.
So having to stimulate a bit of demand now, I think, is good for consumers and it's good for the industry generally.
Are costs falling faster than fares?
Our costs are falling at the same rate as fares. We're taking new aircraft from Boeing. They're burning less fuel, less CO2 emissions. There's more we'd like the new government to do. We think Labour should scrap APD.
Yep.
It's a government that's committed to growth, and nothing would deliver growth in the UK economy faster than scrapping APD, which is a tax on air travel. The UK is an island on the periphery of Europe. It doesn't need to be taxing air travel. It needs to encourage it.
We'll come on to tax breaks in just a moment. Let's talk about Boeing for a second.
Yep.
Have you spoken to Kelly Kelly yet? Kelly Ortberg, new CEO?
No, I speak to Stephanie Pope though on a weekly basis. I think she's making some progress, but the progress has been disappointing. We hope to get 7 aircraft in July. They only delivered us 5. We were then supposed to get 10 aircraft in August. We only got 3. So it's still...
What's the problem?
The problem is they're still having production issues, challenges in Seattle. The supply chain is still challenged. Both Airbus and Boeing are struggling to get their monthly production rates up. But we think and hope that it will improve during the winter when they're under less pressure from aircraft for deliveries in the run-up to the peak summer period. The critical person for me and Boeing at the moment is Stephanie Pope, because she's the one sitting in Seattle trying to fix the production issues. And I think so far, despite some additional delays, she's done a reasonably good job.
Are you confident that you're going to get your MAX 10s on time?
I'm not confident we'll get them on time.
They're going to get certified? When do you think that's going to happen?
I think they will get certified. I mean, Boeing tell me they'll get certified in 2025. As long as that doesn't slip, then our first deliveries are due in the spring of 2027, and I see no reason at this stage why that will slip. But clearly Boeing have to start getting their production numbers up on a monthly basis and not have any more screw-ups like they've had in the last couple of years.
Do lower interest rates stimulate air demand?
I think no, but lower interest rates would stimulate a bit more consumer confidence, a bit more consumer spending. Now, there's no doubt that higher interest rates this summer have depressed consumer spending. That's why we blame, while we're carrying more passengers this year, people are paying lower airfares. There is some price resistance out there, and we think lower interest rates would ease that into summer of 25 and summer 26.
Ryanair CEO Michael O'Leary speaking with Bloomberg's Guy Johnson in London. All right, that is Horizon's Middle East and Africa for this Wednesday morning. I'm Jennifer Zabasaja in Johannesburg. Jumana Bersetchi is back with you tomorrow. Stick with us. Daybreak Europe is next. This is Bloomberg.